happened?
James, it certainly was a very disappointing day, eroding all of those gains that we saw yesterday. But I think there are a number of factors really weighing today. Obviously, we had those weak leads coming from overseas markets. We saw weakness around the region. Global growth concerns really continuing to weigh, particularly after that disappointing and weak data out of China and Japan yesterday. But of course, those falling oil prices really hitting the market today. We saw that energy sector, the worst performer, down a huge 4.8%. Obviously, we've seen those oil prices now hitting fresh 5-year lows. We saw those energy stocks coming under pressure in the US, and obviously that translated across onto the market today as well. On the other end of the spectrum, though, despite seeing a lot of those oil companies coming under pressure, the likes of Woodside, Santos, Oil Search, we are continuing to see Qantas having a fairly strong performance, and obviously that's off the back of those falling oil prices. We also saw, obviously, commodities continuing to come under pressure, the likes of iron ore, copper, nickel. We did see gold slightly higher overnight, so we saw Medusa and Northern Star actually performing positively, but overall saw that materials sector once again coming under pressure. Obviously that NAB business confidence that came through, falling 4 points or so, really didn't provide any confidence on the market today, and unfortunately a disappointing day, really seeing it tumbling and a number of factors really weighing down.
Customers, are they sick of this sort of volatility and looking to trade less? Is that the sense that you've got, or do they see volatility as an opportunity to, take advantage of, the derivative market, some of the options?
Mark, certainly I think the volatility that we're seeing is certainly reflecting some selling, and obviously seeing that on the market today, as Michael has pointed out, seeing those very strong volumes. So I do suspect that we are seeing the same thing, seeing some selling across most of those sectors. And I do think, obviously, that the collapse in that oil price that we're seeing, there's a concern now that that's going to potentially have further ramifications for a lot of those commodities. So I think coming into year end, I think there's a bit of a concern, particularly from some of our clients, that we might not actually get that Christmas rally that some people out there were predicting, and obviously those oil prices and commodities will potentially continue to weigh coming into year end. Obviously we've seen that oil price down about 40% since the peak that we saw in June. Iron ore prices down about 50% since the start of the year, and so potentially could continue to see that weakness. Obviously looking at some of those iron ore shipments as well, we actually saw it in November hitting a 5-month low, so really indicating that obviously that excess supply and those slowing demand concerns out there are continuing to weigh. So I think a lot of the focus for our clients at this stage is, and a potential way to tackle some of these falls, is potentially focusing on some of those US dollar earnings, potentially some of those dividend growth stocks, and also some of those potential discretionary stocks coming into that Christmas trading period. So that's potentially a way that we are suggesting that our clients tackle this, but expecting certainly that we might continue to see some pressure coming into the Christmas period.
Or not, it's looking attractive at the moment, BHP, and if you do think that's the case, whether or not to buy now, or do you think there's potential further downside in the short term?
James, interesting, but I do agree with Michael. I think at these levels it is looking like quite a good buying opportunity, and we particularly like it given the fact that it is obviously diversified. So even though we have been seeing obviously the falls, or the heavy falls in obviously the oil prices and the iron ore price, being diversified across a number of those commodities, I think certainly does protect it somewhat from some of the downside risks. So obviously can sustain any further falls, particularly in that iron ore price, having a very low break-even price. It's obviously a low-cost, low-risk producer. So in terms of that, we certainly do like the outlook for the stock. Obviously, it does have some very strong underlying fundamentals, some strong growth prospects there. So certainly agree with Michael, and I do think at these levels it does look potentially good buying opportunities.
All right, look, on that